We were talking about Talwalkars, 2% higher. They declared their numbers yesterday. Profit up 22%, total income up 17%. We've been joined by the management, the CFO at Talwalkar, Mr. Anant. Sir, if you could take us through your basic highlights, what were the challenges, what were the EBITDA margins that you clock in? PAT and sales seem to be looking much ahead of street estimate.
Good afternoon, Pankaj, and viewers. It was a challenging quarter, and we have been saying even in the earlier quarter that these 6 months are going to be probably one of the most trying for a consumption company which is in discretionary spending like Talwalkar. The key highlight was that we at a basic level were able to achieve a same-store sales growth of between 5%. The existing gyms have added value in terms of having reduced their weight loss program into almost 100 gyms across India. The third highlight was that our fixed asset addition in gym business almost equal to our cash flow for the year, and this is the first year in which the company's cash is equal to accretion in fixed assets from gymming. So we believe that this is going to help in the future in terms of debt reduction or debt management. Our debt remained almost the same as last year, so we are growing 25%. Coming year will be considerably better than last year, looking at the fact that we have taken several steps to increase profitability and same-store sales growth.
Right. What was the same-store sales growth in the quarter? Have you seen any slowdown like some of the other discretionary players?
Generally, if you see the quarterly figures, we have grown 24% on sales, 20% on PAT, and we would have been happier if it was about 28 to 30% growth on PAT and sales both. It is obvious that people were holding back discretionary spending, and to your question, if there was a holdback, it was more difficult to try and contract a customer in the last 6 months than for a long time in the last 6 or 7 years. In that circumstance, our team was able to create new value additions, give people what they wanted in terms of weight loss, personal training, dance plans like Zumba, and basic gymming. I think the worst probably is over for both the company and discretionary spending, and going ahead we should go back to our normal rate of growth.
Right. Have you seen any sort of slowdown in the spending of consumer? This is the first thing, and secondly, what is the store addition that you, or rather the total number of gym addition that you did in FY14, and what are the targets in FY15? I mean, including the slowdown, would you want to hold back a little bit of capex and the targets that we had earlier?
In the current year, we grew at about 15 gyms as opposed to 25 gyms for the year before that. There were two practical reasons for it, because we launched a program of radios across India, which is practically like launching 8 or 10 or 12 gyms. That's one. Two is, did we see a slowdown by people in terms of spending? My answer is they were hesitant. Once they were convinced that it had to be done. Actually, if you ask me, more the stress on financial, more is that a gym will do better. That analogy works only when people genuinely believe that they should exercise to have better health. I think we saw that in the last 2-3 months as we started campaigning that have a better health, even if the chips are down or the business is down. Secondly, to answer you in future, I would not say we have slowed down starting new gyms. What we are doing is we are looking at locations more carefully, and only those locations where we believe the ROC from the first year itself will be 25% or upward are the locations which we are taking off for starting new gyms. This will help the company enhance its ROC from the existing level of 18 or 19% considerably over the next 1 or 2 years.
Right. So last we spoke, you mentioned about the Zumba program, and how do you see it going ahead? Do you still maintain that is one of the next growth stream at Talwalkars?
Between the two, which is Zumba and Reduce, we started a certain amount of Zumbas in the first half of the last year, and we opened a massive amount of Reduce Center, which is a weight loss center within gym, in the second half of the last year. My own take on this is Zumba or any form of speed floor exercise which does not have equipment in it is going to do extremely well, and we as a company, Talwalkar, will be focusing on that over the next 1 year. Again, similarly in diet plans, whether it is Reduce, whether it is Transform, which is a new idea or new form, ideas will do well. which of those ideas will do better than the other ideas. We have to go on experimenting and getting feedback of the people who become our customers in terms of reduction of weight. Once we know that, then we'll be able to ramp up quite quickly on those things.
Right. Thank you so much for joining us and highlighting what happened in the previous quarter as well as plans for FY15. If we look at the markets, as you know, we pointed out at the start of the show, essentially about 100 points higher.